Speaking of inflation, prices are going up for just about everything across a number of sectors. Steve Leisman joins us right now with some exclusive new inflation data ahead of tomorrow's CPI report. Hey, Steve.
Good morning, Becky. Yeah, high-frequency inflation data followed by CNBC hitting all-time highs and shows the leading edge of the expected inflation surge, creating some upside risk for tomorrow's CPI report. CNBC has partnered with State Street Insights to look at inflation data scraped from the web from Price Stats. The latest year-over-year figure is running at 3.9%. That's the highest since the series began in 2009. There was some moderation in transportation costs, but that was offset by rising food prices. The monthly Price Stats data you can see tracks the CPI closely, so tomorrow's consensus of 3.6% looks comparatively low, at least. And all of this is before any possible impact from the disruption of the Colonial Pipeline works its way through. Price Stat, just one of a series of indicators flashing red on the inflation front. Here's some other data that we track. National Federation of Independent Businesses reporting this morning that 36% of small businesses plan to raise prices. That's the most since April 1980. And yesterday, the New York Fed's Consumer Expectation Report said one-year consumer inflation expectations hitting 3.4%, the highest in September 2013. Three-year expectations also rose. The rise in prices, it's expected by the Fed, and most Fed officials have said they think it's going to be temporary. That could be true, but in the meantime, a group of McDonald's franchise owners in a letter obtained by Business Insider warns that rising costs, especially wage costs, could force them soon to increase the cost of a Big Mac. That, for some, Becky, is really going to hit home, huh?
Yeah, people are going to see it just about everywhere. I know restaurants have had to raise prices for lots of things that they're already dealing with. And Steve, as quick as we can gather this information, even scraping the web, like you were mentioning, for that new way of finding these price updates, I think the price increases are coming even faster than that, because you hear it in places that wouldn't be on the web, things you couldn't capture. My brother and sister-in-law were looking to build a deck, and the price quote they got from the guy who came out last week was twice what it had been just a few months ago. They're talking $60,000 now because the price of lumber has jumped 50% just in a month.
Right, and what's really interesting about your question is you've sort of hit the Achilles heel of every single inflation indicator, even the sort of high-tech, high-frequency data that we're following. Not only embedded in that cost of that deck is higher lumber costs, but also higher service costs. And nobody does a good job, as far as I can tell. In our Price Stats series, I understand a lot of the service costs are imputed. There is no good indicator of that, and that's something that also we're watching very carefully, Becky, because, goods prices can rise and fall. Like commodities are bought and sold, and a commodity is something that is relatively easy to supply in most cases. Service is something different. And if we do have a lasting inflation problem, you're going to really want to watch service prices, because that's really the place where it's going to be and hit home and ends up being a little bit more permanent than goods prices, which go up and down with supply and demand.
Shepard Smith here. Thanks for watching CNBC on YouTube.